Hello and welcome to Market Movers. Happy Friday to you. And there is the bell. We got Brent Morris in the chat. We welcome him and we welcome all of you. We got Will W., John the Noble Savage, TMTM, Austin, and many others. Happy Friday and welcome to you. Now, just real quick, you could follow Brent Morris, capital B, capital M, CS. My handle's capital J and B, James Boyd CS. Quick reminder, Brent and myself, we don't reach out and solicit anything. If someone does solicit, you know that's not us, okay? So also be aware, we do post on X. I'll show you something in just a moment as we talk about one of the workshops. Now, just real quick, the market movers, our goal here is to really look at kind of what happened this week, summarize it, but also get us prepared for next week, what might be setting up there. So when we talk about kind of what happened this week, we'll talk about some of the economic data that we actually saw, how the markets ended for the week, any big takeaways, and also kind of what are some things that are going to be happening going into this next week. Now, and I just want to make sure we have an understanding. We won't just be looking at the technicals, want to look at some of the economic data that might have led to some of the technicals. Now, first off, just a quick reminder, you could actually go to youtube.com. You could just search Trader Talks Schwab Coaching Webcast, or just type in Trader Talks. You'll see our little icon here pull up. You can subscribe for free. Why would you subscribe? Well, number one, it's free. Number two, it has all your favorite content, and you're actually going to be able to see all of our live sessions outside the ETF sessions, and that Connie does and Kevin and myself does. But also, you're going to be able to see all the past videos that we've done as well, right on your mobile device. So it's always nice to have actually that information right in your hand. So quick reminder there. As we get going, quick reminder that when we talk about the information, it's provided for general informational purposes only, not considered an individualized recommendation of any personalized investment advice. Also remember that the specific securities we talk about, they are done for examples, okay? And also when we talk about options, we do need to look at an option. We did an Amazon trade. We will follow through on that. I want to touch on that. We've had a question on that, so we will bring that up. And also, I want to kind of take a look at also the kind of the summary of what we saw with some of the stocks and volume on the stock itself, but also the volume on the options here and the open interest. So we will look at a couple of those that stood out. Remember, our examples will be done in the Paper Money software. And also remember that when we talk about investing or trading, it involves risk, including loss of principal. Now, these are some of the agenda items that we'll discuss. Kind of mentioned these already. Let's go ahead and just hop right in. Now, what I want to do is I want to kind of bring up, let me just bring up this right here. All right. Now, when you take a look at the market, when I say the market, I'm talking about the SPX. The SPX was down 0.95, or in other words, not even 1%. This is the second time, though, we've seen some rejection right around the 60.87 level. So the more times we touch it, the more severe it might become in terms of it's a struggle to get above it. If you're a trader, you might have said, hey, James, I saw the market kind of coming down. You might have said, I might do some things like cover calls, things like that to kind of try to offset or change the delta. But when you look at the SPX on the daily chart and you look at this on the weekly chart, did anything really change? I mean, if we're trading weeks to months on the weekly chart, no real change. Still for the week, had the moving averages pinch. On the daily chart, it just looks probably worse than what it really is. It didn't even go down 1%. Now, when you look at the Dow Jones itself, you're going to see something similar. Dow went up to that level. What level? 450. This one is kind of a little bit worse in the fact that the moving averages now are both pointed down. And when you take a look at that, the shorter term moving average, the 10-period moving average, did go red. When we actually look over here to the right-hand side, on the weekly chart, we did see that the crossover is still there, but definitely in the shorter term on the Dow, market not liking the overhead resistance so far. Now, a lot of times we're getting some economic data or news that tends to always come out right around the area of resistance. Can they stop that? I mean, at least let us break out first, right? And when you look at the NASDAQ itself, now lots of overhead resistance on this one, and you take a look at the NASDAQ there on the right-hand side, not as much of a kind of a sustained upward move, at least in the short term, but the 20,930 still holding. What's kind of causing some of this kind of choppy price action, at least for today? Now, when we look at the NASDAQ for the day, it was down 1.3%. Not massive, but it was down more than 1%. Now, when we take a look at this, let me kind of show, let's go to the Schwab.com website. So we need to be at least aware, when is some of that economic data actually coming out? What happened this week? And let's kind of just do a quick summary. Any takeaways? Now, by the way, if you're a technician and you think this stuff doesn't matter, that's what I thought too. It's not quite true. It absolutely can have an effect on what the trend is, especially if they fall short of expectation. So if we go to where it says research and we actually go down to calendar, okay? That's all we did. Go to Schwab.com, go to research, and then calendar. We want to now go down to not where it says earnings, but let's just go to economic, okay? If we go to the economic tab and we scroll down, some of the things I just want to point out here, some of the big ones. ISM manufacturing, it was 50.9. The market expected 49.1. So the market started off for the week pretty good. Then you actually get into factory orders. The market expected negative 0.3. It was actually worse than expected. Now that comes into play later in the week. Stay tuned as we saw the number today. JOLTS, these are the number of job openings. The prior was 8.15 million. It dropped 500,000 jobs, and you're going to see it was down at 7.6. Okay, so job openings contracted. Okay, now when you look at, let's say, also crude inventories, a pretty big build there, plus 8.66. The services number was 52.8. Now remember, anything that's above 50 is expansionary. Okay, so if we had a 50 reading, it's not that strong. If we started getting higher above 50, more. And if you take a look at that, the prior was 307. The market expected 155,000, and they only got 143. So the JOLTS, the job openings, kind of maybe told us maybe that non-farm payroll number is going to be a little light. Now, if you take a look at kind of what sent the market down today at 10 Eastern, is when we actually saw the University of Michigan consumer sentiment. The prior was 71. Market expected 71.3, and they were forecasting 70. Problem is, the actual is only 67.8. Now, there's, as you know, there's been a lot of nervousness, tariffs, things like that, right? Anything with the T word, right? People, I don't like that. And what you're now going to see is that sentiment drop. And when that sentiment dropped, if you could take a look at the market intraday, you know, why does that play into the market? Well, it goes back to 2/3 of the economy is led by consumers, okay? So if they're not feeling as that sentiment is as strong, they might not buy as much, which actually pushes down factory orders, job openings, retail sales numbers. They don't spend as much, right? They might not invest as much, perhaps. And also with that lower sentiment, you know, they might delay some of those decisions, maybe to buy a house and so on, okay? So you want those consumers to feel good, but you actually saw in this last month a little softer. So one thing we want to kind of take away from this when we go back, this is for this week from the 3rd to the 7th. You do want to be made aware of kind of like what's coming up next week. Anything that's actually coming up next week. Do you see anything that we might want to pay attention to? Right off the top, CPI Wednesday, so that's going to go on the calendar, right? And then also if we actually go down and say, is there anything else? PPI, Producer Price Index, okay? For the businesses, CPI is actually the consumer. And so that one, the Wednesday at 8:30 Eastern, and also the PPI, 8:30 a.m. Eastern. So those are before the market opens, and anything on Friday. So if we kind of said, and Friday we have retail sales, which we'd want to see, if that is also lagging with, let's say, the consumer confidence weakening numbers we saw today. So if we kind of put on our calendar anything that stood out, for sure CPI, want to see that. The good thing is it's before the market opens. You're going to have some time to kind of see how does the market absorb that. Second, PPI 8:30, just kind of reminding you so you can write this down, before the market opens on Thursday, and then retail sales, that's 8:30. These are before the market opens, which is kind of nice. Okay. Now, any questions there? Now, if we take a look at this, I'm also going to kind of go back to some of the things that we saw. So one of the things Kevin and I brought up today was sometimes uncertainty can create trends up, sideways, or down, right? One of the major takeaways from this week, and we're going to kind of take a look at what's been happening with some products that have actually for the last week, but also where they might potentially go. We did see gold go over 2,910 an ounce for the April delivery. Now, it wasn't just gold. So as we kind of saw a little tenseness in terms of crisis of confidence, we did also see, unusually so, copper, okay, that did also push to the upside. Now, those are the only tickers I'm going to use in that space. But that's how we need to see the copper price, okay? And this is for the March delivery. So it's a little unusual to kind of have consumers feeling a little bashful, but then when you take a look at copper, it goes up that much. Usually that's viewed as a bullish signal, okay? Now definitely we want to go back to what we said on the CPI and the PPI. We need to continue to see inflation meeting expectation or less than expectation. That could actually then play into what they do with the interest rates, okay? Just another reminder there. Now, so that's kind of, when we talk about commodities, that definitely stood out. Obviously, gold could be kind of maybe some uncertainty, but when you take a look at copper, kind of seeing that the overall economy maybe not as weak as we thunketh. Now, when I take a look at, let's say, the sector that kind of stood out still is really going to be the financial sector. It was up at the high earlier today, did fade, but the financial sector did quite well. Let me actually bring this up and just kind of give us a quick scoreboard as far as kind of who took home the top trophy. Well, when we look at this on a weekly basis and said who kind of won for the week, it was real estate, okay, that was really the top. Then communications, okay? Technology, and then fourth, financials. And notice here, they weren't all up. And matter of fact, if you look at them, there's really three of them. The highest one was real estate. So going into next week, if you said, I didn't do any due diligence on real estate stocks at all, we're just not paying attention. That's going to be something we want to kind of look at. When we talk about communications, which we have for 2.5 weeks, we've hit that pretty hard. Things are in the portfolio there. Technology, again, that's going to be something we continue to watch. It's still holding up pretty strong. And when you look at the financials, that's something that's been probably, well, not probably, has been the strongest in terms of relative strength. Now, I want to kind of just take a look at just real quick two of the stocks that came out with earnings this last week that might have had some material impact. Number one was Google, okay? Well, Google fell down to that horizontal support. The report was weaker than expected. And we had a position on this where we needed actually Google to bounce, or else the loss would be about 350, 360. There was no bounce today, okay? Matter of fact, it actually closed and hit the max loss on that position. And you're going to see that today it jackhammered out below support and just made a fresh new hole to a brand new lower low. So that bounce, we were kind of looking to see if it could bounce, and denied. Okay, now let's kind of show what that position looks like. And that was really the shorter term option, and it was this one. Okay, so what you're going to notice is this is kind of some of the risk. If you do these shorter dated options, you might not have a whole lot of time for it to recover. This was maybe a 10-day trade. That's it. And if we look and kind of see, well, how bad was the loss? I said it was like $360, and it's pretty much 361. It was off by $1 there. So this would go to a max loss, about $361, and it's now below both strikes, stock price at 185. So if we said, hey, did Google come to the rescue this week? No. Matter of fact, he even took out the floor. Now, the other one that was kind of interesting, there was kind of pros and cons here. Amazon did surpass Walmart in terms of revenue, but what you're going to see is the price actually did drop on maybe kind of a caution to the guidance. When we go back and look at the longer term trend, I'm not sure if we could say it's broken, but you did see actually price drop here today. Now, when we look at where it closed yesterday, it closed at 238 and then went down to 239. 4% if you look at close to where it closed today, not massive, but it did yank back. Now, if we look and kind of saw where that diagonal support is, we probably say, look, maybe about 225. Horizontally, is that even a word? We'll take it. Horizontally, it's maybe about 221. So this is kind of like that short-term pullback in an intermediate trend. How did this one fare? Well, let's go back to the position. There was a question on this. So first off, we got shares of stock. Noted. Okay? So we got shares of stock, and if the paper money account bought those shares about 4 days ago at 237, and it's down 229. I'm not really sure if that's riveting, but there it is. Now, what you're now going to see is we had some protection. We had a sold call and the shares. Now, if you had shares of stock and you sold a call, that's your classic covered call. The premium you receive is the most you could make, okay? $495. Well, when we go over here to the right-hand side, we're sitting on right now $461 of the $495. So what's left? Answer, only 34 cents. Not a whole lot. What might the investor do with that position? Now, remember what we said before is if the stock does not go to the upside and it comes down like it did, the position really becomes more like a protective put than like a cover call. Now, notice the stock dropped, and you're going to now see that we bought the put at 495. It's now down at 360. Why did the put not gain value? Well, it didn't gain value yet. But the problem was the volatility dropped, and if you buy a call, you buy a put, the volatility, like a balloon, pops. And when we say pop, it pushes down the price. The stock price did come closer to the long put strike, but it's not like below it. The keyword is yet. Now, what management step might the investor do given this situation? Well, I think first off, the investor might say, James, I'm going to buy the 250 back and try to grab that $461. Now, I want to make sure we're all together here, okay? So we have the stock was purchased at $237.89. If we grab that 461, theoretically, what's going to become the average price of the stock? Theoretically. That's where we bought the stock, okay? But now if we're able to capture the $461, what really now becomes theoretically the average price of the stock if you can grab that call premium, that $461? Answer. Well, that's what we bought the stock for. If we can grab that, the stock now, we average, theoretically, we own it at $233.28. Well, if we actually now own it at $233.28, we're only $4 underwater. Because if we own it at $233.28 and the stock's at $229, that's $4. $4 on a $229 stock, it's down 1.7% from the average price. So when I say average price, I'm saying what do we buy the stock for less the premium we're trying to receive. Now, the rule set that we talked about is we could roll the call once. How do you roll the call? Simple. Right click on it, create a rolling order, and now we're just going to pick that line. It's going to say calendar. We're not doing a calendar, but what we are doing is we're saying, look, buy back the call that we have now. Now, the one thing we want to verify is we want to sell the exact same expiration. Now, there's kind of some pros and cons of doing this. If you did this, you're not really selling a whole lot of time, and it's probably not going to allow you to sell the exact same strike. So when I pull this up, we're probably going to have to look at something in this case, okay? When we pull that up, it's going to probably be like a 245 strike. If I go look and see what strike there is, you got this one, not a whole lot. That one, not a whole lot. 240. Now here's the kind of the problem. You can go farther out, but like when you look at these premiums, that's not a lot of premium left, okay? Now, I'm going to ask you something. If they're only going to give you $1, would you agree to sell your shares for the strike price and add the premium? You might say that's not enough. In this case, the premium is not enough. So the investor might say, you know what, James, I'm going to go out to the 21 March, and I'm going to sell that call where I can get a little bit more premium. Now, when you look at this, probably we still want to have some upside on the stock. So we're going to sell the 245 where there's at least 1% premium relative to the stock price. So a minor adjustment there. Now, you're going to notice that the call and put have separate expirations. Noted. We'll talk more about that next week. But what we're going to do is we're going to go to the 21 March, okay, and sell the 245. All right. Now, why are you selling the 245 and not the 250? Well, the 250, less premium. When the stock goes down, you're probably going to roll down one strike. Okay. Why not sell the 240? Why? Because that's pretty much where you own the stock at, average price. So we're trying to have some upside on the stock. That's why. Does that make sense? All right. Now, notice we can roll for a credit. So we're buying the callback, check. Selling actually the call, the 245, check. And you're going to see that there's also a commission there, and we can see that right there. The commission there is $1.30. So Google and Amazon did not surpass expectation, either one of them. Google is actually down and broke the support. Amazon, shorter term pullback, intermediate trend, not as bad as Google, but this is giving us an example to roll the call. Now remember, that long put is a right to sell for a certain period of time. Okay? So it's not a stop loss. It's the right to sell. Now, I want to kind of talk about just real quick some of the other ones that kind of stood out a little bit. Okay? So we talked about Google and Amazon. Those were big. But the one thing is, when I take also a look at, let's say, NVIDIA, tell me what you see on NVIDIA. Now, the semiconductors have not been doing as strongly. Many other semiconductors. NVIDIA, after that DeepSeek kind of debacle last Monday, NVIDIA bucked the trend. When you take a look at this going into next week, if you said, no, I didn't really watch this level at all, we're right here on the cusp of actually getting a reversal into a channel. Why does that matter? Well, because a lot of times you can get negative news, and a lot of times it can actually completely reverse like the bad news never happened. Now, we have not broken through the resistance, but today we had a long lower shadow, and it smashed its way into resistance. One of the stocks we'll be watching in the first of the week next week is, does NVIDIA get a little push? Now, we can also take a look at the volume on the stock, but a lot of the telltale could also be, let's say, what are the options kind of showing us in the shorter durations? When we talk about shorter durations, we'd probably be looking at maybe 10, 20, 30 days to expiration. And if you kind of look in what we saw today to see were other investors thinking that it might go higher, maybe next week. Well, you're going to see that the at-the-money strikes on the calls for the 21 Feb, you had 100% volume relative to the open interest. Pretty interesting. You also had 10,000 contracts on the open interest of 8,000. Contracts are the number of contracts that are bought or sold. They're not netted off. Okay. So if you buy one and someone else sells one, that's 2 contracts. They're not netted off. Okay. The open interest, now the higher the number of contracts, the more activity that was traded, buys or sells. The open interest, that's the number of contracts that they're still open and unexercised. Okay. So if we look at the put side as well, it was actually still pretty active even on the put side as well, especially at the ones at the money contracts. Keep an eye on that. So NVIDIA is kind of trying to get a little turnaround story. Now, another stock that kind of had some little push here this week was Take-Two Interactive. The stock actually kind of narrowed the loss. The previous loss was 208. Today's loss was actually only 71 cents. We talked about this yesterday in the fundamental class that sometimes you don't have to go positive, just make it where it's less negative. And Take-Two got a pretty big pump of $25 as it did that. That's why it does make sense to kind of watch some stocks where the trends fundamentally are starting to improve. Where could you see that? Let's go to Analyze, okay? Let's go to where it says Fundamentals. And then if we just type in, let's say Take-Two, and we take a look at this. Now, the way this is going to come up is it's going to show annual first here. We're going to go to quarterly. Now, what you're now going to notice is they really had a very bad Q1, narrowed it, did a slightly worse, and then went 71 cents to the negative. So the thinking here, and we talked about this yesterday, is if you can actually get these to actually turn positive, they've maybe soaked up some of the negative losses that they incurred before. Now, I could not start next week without saying the word Boeing, okay? Boeing is on that same theme where they might have taken a lot of the losses, where the next coming earnings might be better than what it was. I mean, you sure hope so, okay? When it was as bad as what it's been, just do something normal for once, okay? Just don't make it where it's as bad. Don't have a plane door fall off or a wheel fall off the plane, and actually sell some planes for once, okay? So one of the stocks that we're going to keep an eye on that's also at a major area of resistance, but it might not be forever, you're going to see that 187. That's another stock. And the thing we also want to do is go back to, is there any volume on this? I'm not going to say it stood out as much as, let's say, the Take-Two or the NVIDIA, but what you are going to see is there's some pretty decent contracts, not the same percentages that I'm going to show you in just a sec, but that's going to be something that we watch shorter term. Do we get some volume coming in? You got to remember something. If someone buys a call, that is a right to buy the shares at the strike price from now to expiration. An investor does not always have to buy the shares. They can just buy a long call, which is the right to buy. Now, the also thing we want to keep an eye on is Netflix. Okay, that's one of the communication stocks that did today make a brand new high as well. Okay. Palantir, brand new high. Big gap this week. Big one. Now, if you look at the volume on this and the open interest to kind of see, are people just trading direction, or are they also playing a little volatility? Well, if we look at the at-the-money contracts on both sides, volume 7,300 on open interest of 1,400. So who cares? Well, that's a lot of activity, right? That kind of comes back to volatility and price action, etc. Those are very active contracts here today. So that's why a lot of people have been talking about Palantir, is that it's pretty liquid. Now, it's not just in the February expirations, but it's also in the Marches as well. So that's going to be another stock that we kind of watch going into the next week. Can that price hold the support level? And can there be a continuance of volatility leading to trading? Now, Starbucks, fill your coffee Starbucks. That was a nice trend, okay? Feel bad for Chipotle. Chipotle went down and Starbucks went up. So the CEO that was at Chipotle went to Starbucks. Starbucks now benefiting, and then Chipotle took the other CEO, and yeah, hasn't been that great. But Starbucks getting a little push here. Now, one of the areas that we want to keep an eye on going into next week, as we said yesterday, but two stocks I want to highlight. One of them is Exelon, okay? And if you take a look at Exelon, it's kind of right at that area of resistance coming into the earnings. Not as concerned typically on these earnings because they're utilities, okay? Keep an eye on EXC. The other one that we want to kind of point out is the Wisconsin Energy. Okay. Now, if you look at Wisconsin Energy, same idea. Prior high. You actually saw today a higher low. Today actually being we had a 1 day down yesterday, followed by a bullish engulfing candle smashing right into resistance. This one is past earnings. So if we kind of said what might be a stock next week that might be a continuation, it might be Wisconsin. Now, the other thing we want to kind of point out here is, are there any stocks in the Dow that might be at risk of going lower or have gone lower and then could trend lower? Intel really kind of has been spending a lot of time near that horizontal support. Some of you you like to trade bearish trades. We're just throwing this out here. Could Intel go down below the support level? The longer we stay here, okay, if buying dries up, all of a sudden people get impatient and say, get me out of this thing, it hasn't done anything. I think there's risk here. Maybe Intel trying to go lower. We also did see on a Dow stock, Nike, no air here. Well, I should say air to the downside. But if you take a look at this, pretty aggressive, and that is a fresh new low. So what's my point in bringing up Intel and Nike? The moral of the story is not everything is going up. So if you're a trader that likes to make me bearish trades, there's two, but I need to add to the pile, okay? Tesla is actually one that we have a bearish trade on, and you're going to see that it also took out the support level as well. How did that trade do? Let's take a quick look, okay? We won't get into it as much. 91% so far. Bearish trade. It was a short call vertical. This one, if the market was open, could just even take that off. The difference between the marks on those options is what you could really make left. Answer is it's about 35 more cents, and that's it, okay? So if the investor said, I'm just going to take that and try to get out, maybe go to the next expiration, you just got to remember there's only 35 more cents here to make, and you have 14 days left, okay? Now, I want to go and just look and see two last stocks, and I want to go to questions real quick. Two stocks that really stood out here. Now, we know that people, number one, like to eat. There's nothing wrong with that. Great food out there, my gosh. Okay, but they also like to go on vacation, okay? Marriott this week, we actually did see a little push going into the earnings. Those earnings is coming up on 2/11, and some of you are not Marriott people, you're Hilton people, okay? And if you look at this, okay, it's almost like Home Depot and Lowe's. We did actually see Hilton, which led on the earnings, popped, and then actually Marriott got a little push from that. So that's why sometimes you want to know, if I'm investor or the investor is invested in Marriott, don't think that what Hilton does is irrelevant. That's not true at all, okay? Be looking for the competitors of your stocks and when they are coming out with earnings. Now, let me just real quick. So what are some of the questions? Now, John actually says, and John, I knew it was coming. I knew this is where you were just going to pipe in here. John actually says, and he's a funny guy, Hilton for the stay. Yeah. John, you're a funny person. Don't let your wife tell you different. No, okay. Now, Neelam says, for WC, bid-ask spread was wide. Okay, so let's go back to this. Is the bid-ask spread wide? Why is it wide? Well, when the market closes, we're 34 minutes after the market has closed, and they widen the bid-ask spread, letting you know that there's not an active market on that right now. Now, if the market was open, the bid-ask spread should or could be narrowed, okay? but that's not unusual when you see the bid. You're in the aftermarket. Okay, this is not Apple, this is not Tesla, and so on. If I pulled up, let's say, a stock like Apple, okay, and I said, well, what's the bid ask spread here? 7 cents wide. Why is that? Well, some of these stocks are still trading in the after hours. If you watch the volume, it's moving on us, okay? So some of those stocks do not all stop trading at the same time. All right. Now, want to also go back to, yeah, John, you're welcome. All right. Now, going back to Namal, Starbucks looks like the cup is overfilled to the rim. Don't say that, those bad words. If we go back to, let's say, Starbucks for just a second, okay? When we go back and look at, let's say, Starbucks, we could even say, my gosh, it looks like it's maybe even a little overextended. When you go back to, let's say, the weekly chart on this, let me kind of slide this over, and we look at this, and I'm going to need a longer term chart. Now, this is a good problem to have, okay? So if I look at a 5-year weekly chart and say, where's the stock maybe trying to go to? Well, I'm going to kind of go to the right-hand side for just a second. The nice thing about the weekly charts is it kind of takes out some of the noise. So far, all we've really done is just established so far the pole. We haven't even gotten a red candle yet. So the investor might say, yeah, I mean, we're just thrusting to the upside like a space shuttle. But this has really gone from about $87 up to about $112. Now, that's $25. Now, let's say the stock does come down to 105. Let's say it does. This would give us a $25 price tag, okay, target wise. And if we did come down to 105, if it did, it'd give us a price projection of about 130. Now, I'm just kind of estimating. What if it did pull back to 105? Well, and now if I looked at where the 130 is on the chart, 130 is not the prior high. It's slightly higher than that, okay? Now, you got to remember something is the change from the Starbucks CEO, excuse me, Chipotle CEO to the Starbucks CEO is they wanted to kind of turn around some of their domestic stores and actually get them to grow again more, meaning just be more profitable, right? So that's one we're going to keep an eye on still. And I also kind of, as I'm just kind of pulling up this chart, speaking of, let's say, one of the stocks and one of the ones in the communication space on a weekly chart as well, Meta as well. Okay, so do not the weekends are a great way to look at these charts on the weekly view. Which ones are still trending, right? Which ones actually are above both moving averages, and so on. So keep an eye on those. I don't think it's always a good thing only to look at daily charts because sometimes you overreact to like a red candle or two red candles on a daily chart, and the weekly chart is telling you really something different. Okay. Any other questions there? No. Now, Agrava actually says, so let's kind of go back to just real quick IXR. Now, if you look at IXR, that's the staples space, okay? Consumer staples trying to get through the 805. I'm not sure if we could say it's as strong as real estate or maybe utilities. It's trying. Now, if you look at, let's say, one of the stocks in there like HSY, Hershey's, huh, well, we don't the point The question was kind of like Hershey, right? We're kind of thinking about going into Valentine's Day. Just a question here. In terms of the staples, this is, 3 days ago, we just made a fresh new low. Not much of a turnaround yet. Very, very, very short term. This kind of goes back to maybe what the underlying price could be with cocoa, kind of influencing some of the sales and earnings, etc. But definitely right now, still a struggle. Again, you want to imagine that you have a finite amount of capital, okay? And you're trying to put your capital where there is a tailwind, meaning an existing trend, okay? If someone is actually saying, I'm going to get in something that just 3 days ago made a fresh new low, for a lot of investors, they would actually look at that as kind of very, very aggressive. Some investors, they like to kind of think about, if I bought a stock, okay, let me say this. If you ran a company and each stock you looked at was like a potential employee, would you employ someone who just 3 days ago made a fresh new low? I mean, if you were the business owner. And that's kind of how some people kind of think about with stocks. If you're going to try to, let's say, hire someone, you might say, look, I want something that has a current trend, not just something where in the last 1 or 2 days. So maybe that's kind of a different way for you to think about it, but that's something for you to think about. Now, I want to go back to financials for just a second, okay? One of the ones we want to go back and look at with financials is Wells Fargo. They have been kind of unwinding some of the regulatory tape, okay? That is actually one where if you take a look at this, kind of has that cup, and on the right-hand side, the flag. Let's go back to the comment, okay? So when we go back to this and said, okay, if WFC was a person and they were looking for their job and you're the business owner, this stock actually made a high just a day ago. This is not something that's promising to be a turnaround story. This has actually been something that has been doing it over time. All right. Now, so if you kind of ask yourself, would you rather buy something in a brand new high versus at a near fresh new low? I mean, if you were the business owner, you decide. Keep an eye on Wells Fargo. And as we wrap it up here, the two stocks we mentioned yesterday, but I'll just kind of re-mention Goldman Sachs, okay? Getting very close to getting that crossover there. And you're going to see that also Bank of America right at the cusp. Well, these are stocks. When you take a look at, by the way, you could also include Citi in here as well on C and BAC, kind of right near this horizontal. So going into next week, if we're kind of thinking that maybe what might be some stocks that we could watch right at the beginning of next week, along with the other stocks we talked about, one is BAC. Now, when you look at BAC, we might think that, oh, it has to kind of take the rest of the ascending triangle. That's not true. If you see the sector goes up, sometimes it might just break out, even though it hasn't completed the triangle that the investor has drawn. Okay? Other investors don't have the triangle you drew, and they might just buy it ahead of that. Now, the one thing we might also say with BAC is it kind of already had a consolidation and then led to that breakout itself. The one thing I also want you to do for homework is look at these charts on a daily and a weekly perspective. So what you're going to now notice is we can kind of grab this to the right, grab it to the left. Let me send this chart out to you so you have it. Okay? I'm going to share that grid with you. Make sure that you sync those up. When I say sync those up, at the very top, you can go to where it says unlink. We're just going to go to number 1. On that chart right there, go to unlink. Yours might say unlink. We're going to go to number 1. That way, anything that we pull up on the left-hand side, if we see this unlink, we're going to change it to number 1. So whatever I click on the left-hand side, it's going to sync to the charts. I would like you to look at these charts also on a daily, but also weekly basis. I also, as a homework assignment, I would like you to kind of say, what are the top 10 stocks that you're looking at this week, coming into this next week? And we already kind of made mention of some. Kind of want to highlight in closing, with what we talked about here today, it was done for example, illustrative purposes only. Kind of also want to make mention that I want to wish you a great, great weekend. Hopefully your team wins. If your team's not in, maybe the team you want to win wins. Enjoy it with family and friends. Now remember, with what we discussed, it was done for example, illustrative purposes only. I want to say thanks to Brent Morris and remember, this has been the class on market movers. Ben Watson normally teaches this, but he's in Atlanta teaching the live workshop. So thanks so much. Take care. Bye-bye. We'll see you back Monday.